Hello, it's Mark from Landmark Financial Services Group. It's the 1st of November, and that means the holiday shopping season is upon us. Now, we thought with the holiday season shopping coming, it would be a great month to talk about budgeting. I know budgeting's not everybody's favorite subject, but it is a really important part of the family financial picture. So budgeting really comes down to two main things, and that is assessing what your income is, the amount of money that comes into the family household, and then determining where that money finally gets spent. Now, there are three ultimate categories. Obviously, the first is income. You have to self-assess. You have to be really assess where is your income coming from and how much is it. Once you're able to determine that amount, the second category is what we call in my business fixed expenses. Now, this is items that you're going to spend some of that income on, and you don't have a choice. If you have a mortgage payment or you have rent, you don't have a choice. You have to make the payment. You have to pay your electric bill and your gas bill, etc., your cable bill. These are all mostly fixed expenses, and they're not going to change much from year to year. After we take our income and deduct our fixed expenses, we have what's left over, and that's what we call variable expenses. Now, variable expenses are the items that we have a lot more control over. This is where your decision making can come in and play a role on where that income gets spent. So for example, you might say that you would like to take some of this extra income and save some for retirement. Maybe you want to save some for college if you have children. That's a great component of where to put some of that variable income. The second would be other more necessities. It would be things like groceries or gas for your car. Those sort of things are required. You have to do it, but you do get to make decisions on how much you spend there. For example, how much you spend on Dunkin' Donuts coffee, right? Plays a role in how much you get to spend on groceries. And then lastly, there's that category where people save for major family events such as a vacation. So at the end, you are able to assess what your income is, you deduct out those fixed expenses, those expenses that you cannot change, and the rest are those items that you have more control over. And when you're done, you hopefully have at least a little bit of money left over, which you can put more towards savings or towards some other activity. And the key principle, the key thing that makes this work is sticking to the budget. And that's where I know a lot of us struggle because, you know, it's fun to spend money on occasion, especially at holiday time. But you have to stick to your budget. And those families who do stick to their budget tend to have much better finances later in life. If you want a little bit of help with this, and here's a couple of websites. First, you can go to mint.com, and that helps you determine, it feeds in from your bank accounts and helps you categorize the items that you're spending money on. And Quicken, which has got Quicken software, I think is one of the better tools that you can use to create budget. So keep those in mind as a way to think about tools for budgeting. If you need any help, you have any questions about any of this, please reach out to us because we're happy to help. You can find us on our website at lmfsg.com, or you can call us at 978-984-5425. Thanks.